Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, David Stendhal here with tonight's deep dive. Today is October 12th, 2017. A lot to cover here tonight, so I just want to point out a few different things. One, we have a wave low that's occurring in the Canadian dollar. We have a slow high in our elastic level that's occurring here in our S&P market. But neither of those are going to be the ones we're going to focus on tonight. The ones that I like to focus on when I have the opportunity are those that are consolidating. And this being the case, we've got cotton. Cotton is consolidating, and whenever you have a market that's consolidating, that's an opportunity to be able to sort of wash away everything that's taken place. We have a new starting point, and anything can happen once we've entered into that consolidation phase, and that's obviously important to me. So what's basically happening here is we're in a consolidation in cotton. We got a mixed bag, no surprise there when it comes to a consolidation phase, and we got a negative outlook here for the technical ratings. So why in the world are we looking at this? It's because of the support. Support is always key to what we're looking at. So very quickly, let's jump right into it. Here's a daily chart for cotton. We had a nice sell-off in the market, and we've got some key support levels here when it looks at the cyan level. We've got an 11 here, we got a 50, got an 11, and if we go back in time, quite honestly, we've got a lot of support and resistance. It's like a stair-step effect to the market. So there's lots of different layers to this. What I want to do is take a look at our targets for cotton and point out a few things. That's why we've got a lot to cover here tonight. When we look at either our support or resistance, and obviously we're looking at support here right now, the S, when we look at these charts, stands for strength. That's the number of opportunities where the market has stayed at a particular level. The C stands for count. It's how many separate situations have we had with different types of support levels. So what we have are three different layers that we're going to be looking at. We've got the first one here at 60. I'm going to call it 68.5. It's 68.419, but I'm just going to call it 68.5. Another level at 67.8. And another one as far as really strong strength and count. We have another one at 66.5. So when we look at this on the inside of TradeStation, even though we're looking at all of these here specifically on the daily bar basis, the chart that I just showed you take into account the daily bars, weekly bars, and 120-minute bars. So even though we're just looking at daily bars right here, it's not going to take into account, unless we look at them separately, the weeklies and the 120s. That's why that previous chart is so important to us. But if we look at the daily bars, we are looking at a level of 66.73, and then the really strong strength is 66.32. So the fact that the market sold off, these are the layers that we're really going to be looking at, either these and the specifics for the dailies or the aggregate for the 120, the dailies and the weeklies, which I was obviously trying to show to you in this particular chart. So the fact that we have three different layers and we have strong strength, meaning the longevity of the support levels, and we have multiple counts. We've got a count of 4, we got a count of 5, we got a count of 5. The more counts that we have in that same vicinity means that we're looking at strong support. We do have a small little gap right through here, and we have another little support gap right through here. So if we were to find ourselves at this level, we would probably then break through fairly easily down to this level. So let's take a look and see what the systems are doing. I point this out because we had 1, 2, 3, 4, 5 systems that triggered short today, and that big move to the downside. So we have a nice position out there with 5 different contracts, 5 different systems, and what we're looking at is the the hoping that it's going to go down to the support levels, and then we're going to figure out what is the market going to do from there. So let's look at things from a historic standpoint. Right now, if we look at a long-term perspective using our depth gauge, it's bullish and rising. You can see that the market has been rising here, and that's why obviously we have a bullish depth gauge. The last couple of times we've had bases and then retracements to the upside we've had a nice little trend that occurred, but it's been choppy, really choppy to the upside. Cotton is an erratic market, quite honestly. Over through here, back in 2016, when we had a base and we moved higher, we still had a bias to the upside, but again, it was choppy. So the fact that we're short the market, it's all short term. We're going to be looking for the market to come down to the support levels that we've been looking at, which in this case on the daily bar basis is back down to 66.73, and if that should not hold, then we'd be looking at 66.32. So we're not looking for a major move, but we are looking for the market to fall to the downside, and then we're going to be looking, as the depth gauge is talking about, and some of those support and resistance levels that I've been talking about with the really strong strength, we'd be looking for the market to really rally to the upside. So I do believe that for the most part, that when we look at the seasonal tendencies, you can see that there's still a bullish bias here. As the market has been moving sideways, there's going to be a bounce that's going to be coming here, at least on the 5-year seasonals. The 10-year seasonals are pointing in the same direction. The 15 years, even though they have a little ways to go before we actually have that surge, but it is coming here fairly soon. So the supports theoretically should hold, and if they hold, obviously our shorts will liquidate their position, we'll make a little bit of a profit, and then the systems will start to reverse course and we'll start to go long the market. And that, my friends, is what we're going to be looking for. So here it is. Here's a projection. I've not talked about this before. It's always off by a day, but here is the projection from the 11th, which is yesterday, which would be the little yellow dot. Market moved kind of sideways, and then we're expecting some type of little pop here to the market. So if we have a market that has strong seasonal tendencies, that's when we're going to be looking at this particular chart. So for the time being, we're kind of hopeful that the market really falls a little bit. Maybe this doesn't really react here on the short-term basis to the upside, but that pop is coming according to the seasonals. So for our purposes, some of the profit that has occurred here in the market will be, we'll be taking some of our profits here fairly soon. And if the market is able to recover to the upside, then we'd be looking for a little bit of a pop that's going to last for maybe 4, 5, 6 days or so as we go into a choppy phase. So that's what this support level is referring to. We've got a resistance level here on soybeans. We got a support level here on RBOB. These are things that you should be looking at as well, but I'm simply pointing out just one particular market. It's the fact that we're in a consolidation, mixed bag when it comes to the trends, and that support. We're going to be looking for a quick little pop to the downside, as I've been mentioning, for the shorts, and then hopefully the market does base and starts to reverse course, and we're able to take advantage of the systems reversing course and going long the market as well. So for time being, we're just playing on the short side. We'll see where the market goes from there. If you have any questions, please email me. Find me on Twitter at my name, David_Stendahl. You can also log on to our website and look to see if you can gain access to our private Twitter account as well. We do like questions, so if you have questions, please contact us. Otherwise, we'll take a look at another market tomorrow. Thanks so much. Bye-bye.